I'm staring at a letter from my health insurance provider, and it's got a number on it that makes my heart sink: $4,219. That's how much I owe for medical expenses from last year. And the worst part? I've been putting it off, avoiding the bill, hoping it would just magically disappear. But it won't. And that's when it hit me: I've been leaving thousands of dollars on the table by not utilizing one of the most powerful tax accounts out there, a health savings account, or HSA. You're probably like me, struggling to make sense of your medical bills and feeling overwhelmed by debt. But what if I told you there's a way to save thousands of dollars on taxes and medical expenses? It sounds too good to be true, but it's not. With an HSA, you can set aside pre-tax dollars for medical expenses, reducing your taxable income and lowering your tax bill. And the best part? The money in your HSA grows tax-free, so you can use it to cover medical expenses in the future. Let me give you an example. Let's say you have a high-deductible health plan and you contribute $5,000 to your HSA each year. Over 10 years, that's $50,000 in tax-free savings. And if you use that money to cover medical expenses, you won't have to pay taxes on it. That's a huge advantage, especially if you're in a high tax bracket. But here's the thing: most people don't take advantage of HSAs because they don't understand how they work. They think it's just for medical expenses, but it's so much more than that. It's a tool for building wealth, for saving for retirement, and for reducing your tax liability. So, how does it work? Well, first you need to have a high-deductible health plan, which is a plan with a deductible of at least $1,400 for an individual or $2,800 for a family. Then, you can contribute to an HSA, which is a special savings account that's designed specifically for medical expenses. You can contribute up to $3,600 for an individual or $7,200 for a family, and the money goes in tax-free. Then, you can use the money in your HSA to cover medical expenses, such as doctor visits, prescriptions, and hospital stays. And if you don't use the money, it rolls over to the next year, so you can use it in the future. But here's the thing: HSAs are not just for medical expenses. They're also a great way to save for retirement. Because the money in your HSA grows tax-free, you can use it to build wealth over time. And if you use the money for qualified medical expenses in retirement, you won't have to pay taxes on it. That's a huge advantage, especially if you're living on a fixed income. So, if you're not taking advantage of an HSA, you're leaving thousands of dollars on the table. It's time to start utilizing this powerful tax account and start building wealth for the future. Now, I know what you're thinking: this all sounds great, but how do I get started? Well, the first step is to check with your employer to see if they offer an HSA plan. Many employers offer HSAs as part of their benefits package, so it's worth checking. If your employer doesn't offer an HSA plan, you can also open one on your own through a bank or insurance company. Once you have an HSA, you can start contributing to it, and you can use the money to cover medical expenses. And remember, the money in your HSA grows tax-free, so it's a great way to build wealth over time. So, if you're struggling to make sense of your medical bills and feeling overwhelmed by debt, it's time to take control. It's time to start utilizing an HSA and start building wealth for the future. You're not alone in this struggle. Millions of people are struggling to make sense of their medical bills and feeling overwhelmed by debt. But with an HSA, you can take control of your finances and start building a brighter future. So, what are you waiting for? Start utilizing an HSA today and start building wealth for tomorrow. And if you're still not convinced, let me give you some numbers. According to a recent study, people who utilize HSAs save an average of $1,000 per year on medical expenses. And over 10 years, that's $10,000 in savings. That's a huge amount of money, especially if you're living on a fixed income. So, if you're not taking advantage of an HSA, you're leaving thousands of dollars on the table. It's time to start utilizing this powerful tax account and start building wealth for the future. Now, I want to ask you a question. What's the biggest medical expense you've had to pay in the last year? Was it a surprise bill from the hospital? Was it a costly prescription medication? Whatever it was, I want to know. Drop your biggest debt in the comments below. I read every single comment, and I want to hear from you. And if you found this video helpful, hit like, it tells me to keep making this content. If you know someone who's struggling to make sense of their medical bills and feeling overwhelmed by debt, send them this video. They might just find the solution they've been looking for. And if you want to learn more about HSAs and how to utilize them to build wealth, check out our next video, The Ultimate Guide to HSAs, How to Use Them to Build Wealth and Reduce Your Tax Liability. It's going to be a game changer, and you won't want to miss it. Thanks for watching, and we'll see you in the next video. One of the most significant advantages of an HSA is its ability to provide a safety net for unexpected medical expenses. Let's say you're involved in an accident and need to undergo surgery, with a total bill of $20,000. If you have an HSA, you can use the money in your account to cover the expense, without having to worry about paying taxes on it. This can be a huge relief, especially if you're already struggling to make ends meet. In fact, a recent survey found that 60% of people who have an HSA use it to cover unexpected medical expenses, such as emergency room visits or surgeries. Another benefit of an HSA is its portability. If you switch jobs or retire, you can take your HSA with you and use the money to cover medical expenses in the future. This is especially important for people who are self-employed or work as freelancers, and may not have access to traditional health insurance. For example, let's say you're a freelancer who contributes $5,000 per year to your HSA, and you have a total of $20,000 in your account after 4 years. If you decide to switch to a traditional job with health insurance, you can still use the money in your HSA to cover medical expenses, such as dental work or vision care. It's also worth noting that HSAs can be used in conjunction with other tax-advantaged accounts, such as 401(k)s or IRAs. By using an HSA in combination with these accounts, you can create a comprehensive retirement plan that includes both medical and non-medical expenses. For instance, you could use your HSA to cover medical expenses in retirement, while using your 401(k) or IRA to cover living expenses. According to a recent study, people who use HSAs in combination with other tax-advantaged accounts save an average of $5,000 per year on taxes and medical expenses. In addition to the financial benefits, HSAs can also provide peace of mind. By having a dedicated account for medical expenses, you can avoid the stress and anxiety that comes with unexpected medical bills. This is especially important for people who have chronic health conditions or ongoing medical needs. For example, let's say you have a child with a chronic illness, and you need to pay for regular doctor visits and prescription medication. With an HSA, you can set aside money each month to cover these expenses, and avoid the financial burden that comes with unexpected medical bills. It's also worth noting that HSAs can be used to cover a wide range of medical expenses, including alternative therapies and wellness programs. For instance, you could use your HSA to pay for acupuncture or massage therapy, or to cover the cost of a gym membership or fitness classes. According to a recent survey, 70% of people who have an HSA use it to cover alternative therapies and wellness programs, in addition to traditional medical expenses. Furthermore, HSAs can be a valuable tool for small business owners and entrepreneurs. By offering HSAs as part of their benefits package, small business owners can attract and retain top talent, while also reducing their own tax liability. For example, let's say you're a small business owner who offers HSAs to your employees, and you contribute $2,000 per year to each employee's account. This can be a valuable recruitment and retention tool, especially in industries where health insurance is a major benefit. In terms of investment options, HSAs can be invested in a variety of assets, including stocks, bonds, and mutual funds. This allows you to grow your HSA balance over time and potentially earn higher returns than you would with a traditional savings account. For instance, let's say you invest your HSA balance in a stock portfolio and earn an average return of 7% per year. Over 10 years, this could result in a total balance of $50,000 or more, depending on your contributions and investment returns. Finally, it's worth noting that HSAs are not just for individuals and families. They can also be used by trusts and estates to cover medical expenses for beneficiaries. For example, let's say you're the trustee of a trust that provides health benefits to beneficiaries, and you use an HSA to cover medical expenses. This can be a valuable tool for estate planning and tax planning, especially in complex family situations. According to a recent study,